So welcome. Today we have Gwen Cheni with 22 years of investment experience. Gwen is the real deal. She's a partner at Khosla Ventures, a 16 billion early stage VC firm. She spends her time focused on deep tech across all sectors. Previously, Gwen was a partner at IndieBio SOSV covering bio and AI. She's a founder and managing partner of Galapagos Ventures, an early stage venture fund focused on the intersection of biology and AI machine learning. She was a director at Studio X, which is a machine learning venture studio funded by Shell and BCG, and a venture partner at Fusion Fund, which is an early stage fund focused on AI, machine learning, robotics, and devices. Gwen was on the board of advisors at Singularity University Ventures, an impact-focused accelerator, and helped launch their first batch of startups in the Nordics. Prior to venture, which is how I got to know Gwen, she spent 18 years on Wall Street investing in public equities, started her career at Goldman Sachs, JPMorgan, was promoted to portfolio manager at a $300 million innovation-themed hedge fund. Gwen has her degree in economics with a minor in computer science, electrical engineering from Yale University, and her MBA from U of C. She currently sits on the advisory board of the Yale University School of Medicine. Gwen is the author of a chapter in a physics textbook, Lasers, a second author on 2 publications, Immuno-Oncology, and a co-owner of a patent on magnetic resonance. That's all. No, but most importantly, Gwen is a great human being. So I know today's going to be a ton of fun, and I'm really excited about learning from Gwen today. So welcome, Gwen. So great to have you here today.
Always great to see you, Nadine. Thanks for having me.
And one of the things that people always want to know is what are the key criteria that you're looking for in a new investment opportunity? Because obviously you're focused on some really exciting areas, but when you're looking at what makes a Gwen Cheni investment, what is it?
I'd say, there are a lot of similarities between the public markets and private markets, but I think one difference is with public stocks, you can sell. With venture, there's no selling, right? If you are selling, there's a huge discount in the private markets. And so I think an additional thing that I look for being a venture is, is this a founder I see myself working with for literally the next 8 to 10 years, right? Because ideally, if things go well, that is what it's going to be. So that's, I would say, in addition to all the stuff I used to look for on public markets, is one more that I look for on the private markets.
And how do you source new investments? Because your days in the public markets are one thing, but it's another thing in the public side. How do you go find the new things that you're going to be looking at and deciding on?
So I will say that maybe I'm doing things wrong, but I think being a VC is just nonstop. There hasn't been, I've been at KV now, Khosla Ventures, for 13 months now, and I've worked every single weekend. I used to work both days of the weekend, and now, sometimes I try to take a day off, and my friends are always bugging me. They're saying, "Go outside, Gwen. You're getting very pale." So it's really everywhere, and everywhere where there are good founders and startups. I think luckily I've been doing this for enough times that founders are referring their friends to me. So that's sort of proof that I'm doing something right. That if I were a bad investor, I wouldn't get these referrals. So I'm very grateful for those.
And what area or areas are you most excited about right now, and why? So where are you spending your time and saying, okay, I'm going to, that's obviously your most precious resource is what we're hearing about here. How do you allocate that precious resource?
Yeah, I'd say, so I was hired as a generalist at Khosla Ventures. I think over the last 13 months, I've definitely recognized that the deal flow that followed me are in AI, biology, and sustainability. I think it's also good to know where your strengths are. I'm very good with data. I'm very good with numbers. I can program. I'll stay with a computer bug all weekend until I fix it. And I just love the sort of biology, chemistry, and now, the biophysics side of things. So the area that I've really honed in on, and I'm actually starting a company in it, spinning out of Khosla Ventures in July, is the intersection of AI and biology. And this is a field, I'm talking about the field that was originally, AlphaFold was not AlphaFold and isomorphic, they were not even in the news up until 2-3 years ago. So this is how new the field is. But I find it completely thrilling because I've read every single paper that's come out. So that's what I do after every morning. I have a cup of coffee so I can focus on very dense material. And, I just read. I think the beauty of being in a very dense area that's very new is you can get a head start and actually understand all the papers that are coming out.
And so when you're spinning out this company, what is that company going to do?
Yeah, so it is similar to AlphaFold and Rosetta in the sense that it's computation first. I see this opportunity, coming from the public markets. There's a part of me that just wants to give back, but I also need to use my strengths. And so given my strengths are in data and computation, what I see is that's a tool right now where it's advanced enough that instead of scientists in the lab spending 2 years, 3 years, going through a series of experiments, computation can actually tell us, it can narrow down that 10,000 in the course of 2 months down to, make only these 10 molecules instead of the 10,000 you were going to make. So number one, it's a huge time savings, but in addition, it's a huge cost savings. And I think that's especially crucial in the current market environment. So, in some ways, a lot of my friends, all of my VC friends said, do you want to raise right now? The market's not that good. And I said, if I were doing just plain biology, absolutely not. I would wait. But computation, I'm working with a team that won the most recent CASP competition. So this is what brought AlphaFold onto the main stage a few years ago. So I'm working with the new winner that won CASP. And I was very frank with the team. I said, the market's not great, but we're in computation. So if we don't sort of capitalize and expand this head start that you have, it's easily eroded in a year. There's going to be another winner in 2 years. CASP is every 2 years. And so I really just want to get a jump on it.
And so who will be your client? So what is like the offering that you're going to provide, and who's buying it, or who are you providing that to?
So the moment I realized I might have something is there was a chance meeting literally at a large, I go to these bio dinners. This is how I go to these.
We're learning a lot about you. We're like, where does Jen spend her time? Bio dinners.
Yeah, this is the only dinners I go to. I don't do anything fun anymore. And it just happens that the person sitting across from me, this is a long table, he's the CTO of a therapeutics company in the exact area that we're focused on. So it's not the deal. We're hoping to ink it on Friday, in which case I can disclose it by then. But they just raised a lot of money, so they have capital and they have their first asset, but they're struggling with their second asset, finding a second and third asset. Okay. And so I said, you don't have to build a computational team; you can just work with us. And so then, there's an immediate meeting that was booked to hash out the details. And so that's when I realized, hold on a second, there's something here. And I'm not going directly for proteins because I think, Rosetta, David Baker Lab, and AlphaFold with isomorphic, they're just so good in that area. There's a concept in venture called blue ocean, red ocean. I'm hoping for blue ocean so I don't get eaten.
Is red ocean blood in the water, or what is red ocean?
Yeah.
Yeah. And so are you thinking, okay, we do it for one client and then show proof of concept there, and then we can work with other companies who need those computational teams and that type of expertise? Is that the idea? That
is the initial idea. I think this is the, for good or bad, right? I think it's a double-edged sword. This is both the good and the bad of having a CEO that comes from an investor's perspective, now turning into a builder. I'm thinking about literally every dollar, maybe every $10, what's the return on capital? Is there some way I can optimize for it? And, so the beauty of having been at IndyBio, we built out the New York lab space twice because we lost after 1 year. So we had to rebuild the lab space. And just buying the equipment, moving the equipment. I know intimately well how expensive lab space is and the equipment that comes with it, the consumables, not just, not even including labor, right? And so I think factoring all that in, if you look at early stage companies, that really 4x the burn rate. And so I'm hoping to delay that aspect, especially now that I've found at least one great partner that's willing to give me their proprietary data, which is actually data that nobody else has to help train our model on a specific aspect. So the more I can do that, I think it's a win-win for both parties, right? They don't have to spend the millions to hire a team and more millions to train the model. So the model that we have that won the competition, it was trained on 100 GPUs for a year. So that's, time and cost that's saved for
Sure. And one of the things I like to learn from great investors is how they define risk. You talked a little bit about risk here in terms of the burn, terms of capital efficiency. So I love it because it's all about cash flow, right? At the end of the day, you don't have cash flow, you're in the red water most likely, right? Or at least you need to get some capital so you survive that red water. But how do you define risk, Gwen? And how do you address that when you're, whether it's doing due diligence and thinking about this idea, structuring the deal that you just, hopefully are going to strike here on Friday, or work with companies, or in this case, lead the firm.
Yeah.
Going from looking at a portfolio of things to the business, thinking about risk. How do you define it, and then maybe apply it a little bit to this opportunity that you're doing now?
I think this is surprisingly sort of the commonality, similarity between what I was doing on the public markets and now on the very early side of private markets. I think I define risk as knowing what you own, right? And so that was definitely true on the public side. When I was on the public side, average holding period for the funds I worked at were 8 years. And, most of them were long only. And the hedge fund I worked at, we shorted indices to balance out the beta, right? And so it was still very much long only. So I think that mentality of knowing what you own, partner with, CEOs, help them improve their business. So sort of not activism, but suggestivism, right? That's translated extremely well to the private markets. I think on the private markets for early stage startups, I think the huge difference, I guess the one and huge difference is I get to be a builder, right? And so not only is it knowing what I own, I get to build it. And so it's intimately knowing the risks. So I think so in some ways, despite the severe concentration if I focus on one company, in some ways I really know what I own.
That's a really great point, especially since you have a portfolio in the public markets, and obviously, hopefully, that, especially if you're living with 8 years, that's a pretty long time these days. But obviously, you're in a very specific part of the market that you are invested in. It makes sense that you translated it into the private markets, into VC, and now as a builder, being able to, you have concentrated risk from a business, but in same ways that you can affect that risk, right? By leading, by managing. You're, as you said, intimately involved with the risk, with the business, with the clients, with your business model, and your offering, so that you can hopefully have a bigger impact than on the public markets, when you can suggest, but doesn't mean they're going to do it, right? I was an active investor for 8.5 years, and just because you ask for something, even if you're on the board, you don't get it, right?
Yeah.
And when you look back, because it's spanned, there are too many accolades to mention in the intro. But what is one of the greatest lessons that you learned in your career? So there's some people going to be listening to this who are earlier in their careers, some who are later, who might find parallels. But when you look back, what is one of the greatest lessons that you've learned?
I think lesson for myself is different from the advice I give to sort of younger folks. The advice I give to younger folks as they're mostly looking for career advice is, I think it's really easy to get swayed by the money, especially if you have tuition debt and whatnot. And I totally get it. I was in that boat. But I think, and I know this advice is trite because everyone says it, but it really is true that you have to do what you love, because this is otherwise I would not be working every single day if I didn't love it. You're going to get burnt out. And so if you love it, you might get burnt out later. So, so that is a lot of inner work that I think sort of younger folks have to do. And, not all of us know what we want to do or love to do. And so I think that's why having summer internships or, short 2-3 month internships is a huge benefit for younger folks that are trying to figure it out. Because, some of us are very good at sitting still and thinking about it. Others need a little bit more hands-on experience. And I totally get, different personalities. I'd say the biggest lesson for myself have been, somehow I've turned into this person that is just not, I'm not swayed by rejection or failure anymore. I'm not sure if I ever was that severely burned by it, but I think that's also what eventually made me realize, okay, I think I can be a founder. Is you're going to go through so many rejections. I have a couple of VC meetings lined up, and most of them are not going to go well, right? And so, or I'm not going to get an investment out of it. And so, I think not taking rejection personally, but still trying to learn as much as you can out of those experiences, I think it's absolutely necessary for a builder.
Yeah. And that's a fascinating. So you become from hearing the pitch to giving the pitch. Has it affected now, having heard so many and probably accepted some and not accepted many more? How has it honed how you pitch what you're doing to other VCs outside of your current one?
It's shaped a lot of how I talk about things, right? So how I'm going to run this company is definitely very different. I'm not thinking about, I need to raise at least 5 million, ideally 25 million to run this lab and hire these folks. I think about, what's the path to revenue?
Right.
So I'm not sure if this is coming from my experience from the public markets as well, or from, the current market conditions that we're in. But, that's definitely a difference. I think, I'm able, despite the 26 machine learning courses I took the last 3 years, I think I'm able to distill it down a little bit better than, the folks that are really in the weeds, right? Is that, having had to pitch to partnerships and explain things to folks that are not in the area, really being able to use analogies, trying to describe things in ways that they understand, to things that they can relate to. That's something I hope to be slightly better at. But I think, one of the things is, and I noticed this immediately, after my first rejected VC meeting, is I have so much sympathy for founders, right? I've always had sympathy for founders, but now it's empathy and sympathy.
You feel the pain. You didn't just see the pain. Yes.
Yeah. It's an act of love and defiance to be a founder.
That's so amazing. You're such a beautiful soul. I'm really excited that we got to talk today. I think the last thing that folks really want to hear from, though, is about if they want to keep abreast about what you're doing, that's number one, or two, get in touch. How can they do that with you?
Yeah, so I'm very open about my email address. It's gc@khoslaventures.com. It's also listed, I think all of our team emails are listed on our website. I'm also on Twitter. I'm on LinkedIn. I'm on Facebook. So feel free to follow. My Twitter is open, so feel free to DM.
Awesome. Thank you, Gwen. What a pleasure. Best of luck of your new venture. I can't wait to hear the name of it and follow it and hear all the advancements that you're doing. Just remember us, as you go throughout your career here, and hopefully I'll see you in the Bay Area and give you a hug in person. So thank you so much, Gwen.
Thank you.